Welcome back, everyone. We're joined now by Caleb with Foster Financial. Caleb, thank you for being here with us.
Thanks very much for having me.
Yeah, well, we're here to talk a little bit about some of those financial tips. What are you here to share with us today, man?
Yeah, that's exactly right. So here in about an hour and a half, the Fed is actually announcing their new interest rate kind of target percentage, okay? And it's expected that they're going to increase interest rates by about 25 basis points, okay? So a quarter of a percentage point.
Okay.
And remember, they're doing this to attempt to curb inflation. Okay, so inflation is really high. They're trying to bring it back down to that target 2% level.
Yeah.
But I think there's a lot of people at home who say, you know, hey, if I'm not taking out a new mortgage, I don't really see how the interest rates impact me. And so I want to mention today how if you're somebody at home who has a lot of cash in the bank, if you're somebody who's, you know, a really big saver and you like to keep cash in the bank, someone has, you know, $100,000, $200,000, $300,000 in the bank, these rising interest rates paired with inflation really impacts them. Okay, so, you know, on one side of the equation, you have high inflation, 40-year high inflation right now. I think it was 6% the last time that they clocked it in.
Yeah.
And so what that does is over time, it reduces the purchasing power that somebody has in their bank account. So of course, if, you know, if somebody had $200,000 10 years ago, it could purchase, you know, a really nice 3-bed, 2-bath home in the area on 10 acres.
Right.
Over time, inflation has reduced what that could purchase, and you know now in 2023, it could get you, you know, maybe a 2-bed, 2-bath home on 5 acres or whatever it might be. So all that to say, if you have a lot of cash in the bank, the rate at which the purchasing power is decreasing is getting faster and faster, and so you're essentially losing purchasing power quicker. On the other side of the equation, you have interest rates increasing. And what this does is it actually changes the opportunity cost of the cash that you have in the bank. And the opportunity cost is kind of throwing it back to Econ 101.
Right.
It's essentially, you know, the opportunity of the next best alternative, which just means, you know, maybe the next best alternative for your cash in the bank is putting it in something like a CD that's yielding higher interest, or something like a fixed annuity that has much higher interest. With interest rates rising, something like a 1, 2, 3-year fixed annuity is yielding over 5% right now. And so if you have your cash in the bank, you're kind of giving up that 5% that you could be getting elsewhere.
Right.
And so there's two sides of these equations. You know, you have inflation eating away, and you have these high interest rates that you could be getting if it was in something like a fixed annuity. And so all that's kind of pointing towards not having a significant amount of your wealth in cash in the bank right now.
Okay, so for those who have their cash in the bank, we hear those who this may be targeting or who will be greatly affected by it. What do we do in that case that, you know, these interest rates do rise? Is it some of the things that you had suggested about where to kind of put the money and where to put those finances right now?
Yeah, good question. That's exactly right. One thing that we've been leveraging for a lot of our clients is laddering CDs, and so that will kind of take that cash, get them an interest rate on it, or we've used some of these fixed annuities that will again get them kind of a nice interest rate, still keep your money very, very conservative, very safe. The one thing that you kind of give up when you go from cash in the bank to something like laddered CDs or fixed annuities is a little liquidity, okay? You know, if you go to your bank and you need to withdraw $10,000, you can do it immediately. If you have the money in something like a CD or fixed annuity, it's not as liquid. And so that's kind of that, you know, weighing that where you retain some of your purchasing power, you get a higher interest rate, but you give up some liquidity.
Yeah.
And for a lot of people, it makes sense to do that right now.
You know, Caleb, we appreciate all of the information. We know that, you know, money and finances can be, you know, a lot for many of us. So we definitely welcome you all to, you can learn more by taking a look at your screen right now. We'll be up, there we go. We get that information to you all, and be sure to check out their website. You can find more information and ways that you can be able to know about how to take care of your money, right?
Yeah, that's exactly right.
Thanks for that, Caleb. We'll be right back.